Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Perion. So Perion just reported a Q4 21 results. Uh, the stock is up about 5% before the market, pre-market. Um, it's a small ad tech play, but they've just delivered, it's quite standard now. They kind of beat on the top line, beat on the bottom line, increase their guidance. As it's just been really strong performance for them this year. You have to keep in mind that the previous year, 2020, was particularly difficult for ad tech companies, particularly in the early stages of 2020. But overall, here now, even as we compare like for like with Q4 2020 was very strong. So for them to come up against Q4 2020 and deliver strong results, very good. All around very very strong results, and the guidance that they're putting out for 2022 is also looking very strong. So all in all, you left with a company that is really quite impressive. So you got a company here that makes a lot of cash flows. Its EBITDA to free cash flow conversion is very strong, approximately 100%. No debt on its balance sheet, carries approximately 320 million of cash on its balance sheet. Of course, they made the convertible issuance in December, but even accounted for that, so you got 320 million of cash and cash equivalents, no debt. 30% of its market cap is made up of cash. Ad tech companies, they're difficult because they don't get a lot of visibility. It's difficult for them to see how things are going to play out. And I don't know how they do it, but Perion is one of those few ad tech companies that they put out the guidance for the full year ahead. It's really, really like difficult to do, and they do it, and they've been doing that for a while. And this speaks to them being, what they're saying at the core. They say, listen, we give you a sustainable, predictable business, and they're delivering on that. The stock is priced at approximately 11 times my estimates for EBITDA. So yeah, I think that this one is interesting. Ad tech in general, we're just starting the earnings season. Ad tech has been brutal. Like the last 3 months, it's just been, look at Iron Source, look at Magnite, look at PubMatic. It's just been like poof, 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 everything in negative territory. Against those comparables, impressively, Perion's actually not doing so badly. But anyway, so it's just been a difficult period, and you got to think about it from this perspective. There's so many investors that are fully disenchanted with investing in ad tech companies. So against that background, I think that for a new investor coming in right here, right now, that hasn't got exhausted themselves, that they still got plenty of stamina, and they're not like disgruntled with investing in the space. I think this is going to be quite a good year for them. There's always concerns in ad tech, right? So of late, there's been this concern of privacy, and then there was how can ad tech companies help brands increase their ability to have visibility into their adverts? How can they measure, and how can they accurately target the users on the end? So that's one of the things that's been overhanging, and people have been having a lot of doubts about that. But when it transpires, Perion, they were up 34% year over year. I know that there's some kind of inorganic aspects there, but still overall, people have been concerned about interest rates here, inflation, and all kinds of worries. But when it came down to it, they delivered. So yeah. So I was already kind of batted around this. Q4 results up 34% year over year. Remember that Q4 of last year they reported 51% year over year growth. So to come against a heavy comp, that tough comparison, for them to deliver more than 34% growth, I think that's really strong. The guidance for they update guidance by 1%. So rather than growing at 29%, they're talking about growing at 30% year over year in 2022. Now, if you think about this, it's very difficult for them to have a lot of visibility into the whole year ahead, and for them to have that much confidence to say, okay, we're now in February, we're going to give the guidance of 30%. It's like, wow, that's pretty strong. They could have easily sat back on the 29% guidance and just kind of waited until they got the visibility in Q1 and said, okay, now we're going to update guidance because we have more confidence. So to come right away out of the bat to up the guidance, I think this is quite interesting. I think that speaks to the confidence of the business overall. So I haven't gone through the earnings call because the earnings call is being live as I speak. As I do record this video, they're going on to the earnings call right now. So I haven't got a lot of details from the earnings call. But one of the things that has concerned investors is that Perion has partnered up with Bing and how and helping them improve their monetization of their advertising properties. And this is what Perion records in the search advertising segment. And that's one of the things people think about, that oh, you know, this left at the whim of Microsoft. Now, a few things that are worthwhile talking about here, right? So we are talking about 37% of the total revenues. Okay, so it's not the bulk; it's small. It's less than half. Secondly, Microsoft has been a partner with Bing for 10 years. Okay. Next, they've just extended their partnership by another 3 years and on better terms for Bing. So that doesn't strike me as a fraught relationship. You know, you don't extend a partnership for 3 years if you're not happy with your partner, right? It's just so simple. Anyway, so the crown jewel here obviously is the display advertising segment that includes the CTV and video aspects, and that was up. It makes up approximately 65% of total revenue. So 65% of Perion's revenues come from video and CTV. Now, on a pro forma basis, that was up 23%. Not what you see recorded there, 46% on the press statement is. The organic is 23%, but still 23% is, I think, is quite strong, and it's not a company that's just kind of ticking along and barely surviving. So the next part that I think is quite interesting to talk about is that in the early parts of 2021, everyone was like, oh, you know, forget about profitability. All I care about is high growth margin business, high growth margin business. But then, you know, November came around, December came around, and poof, the market fell, and everyone's like, okay, actually, yeah, can I have some profits, please? And I think that on this metric is really where Perion shines. So Perion, you can see the green arrow at the bottom there, they reported 71 million of EBITDA, 70 million of EBITDA, and their cash flow was 71 million. So they have a very high free cash flow conversion. They don't have a lot of capex. So what you see in EBITDA very much translated into free cash flow during 2021. And you can see here on the left side that compared to the prior year, so the previous year Q4 2020 they had 13 million, and now Q4 2021 they had 29 million. So it's not only about the whole year that they did well, it's just also finished strongly, which is always great to see, because you know the Q4 season is really difficult, and for advertising companies that's really where you make a lot of your return. So you really need to be on top shape there, and for them to deliver there, I think that speaks volumes. Now, I don't know precisely how many shares outstanding they have, but they raised the convertibles at the end of December. So they talk about the Q4 number having 40 million shares outstanding, but because it's an average of the quarter, I think that they're going to come around to about 45 million shares outstanding starting Q1 2022. So that puts the stock price at approximately a billion market cap, thereabouts. Now, given that, as I already discussed in the introduction, they have 320 million of cash and no debt on the balance sheet, and they're highly free cash flow generative, that's really, really strong. And that means that 30% of the market cap is just made up of cash. So, you know, it gives you a little bit of wiggle room. And now, I don't really know this for certain, but I believe that they'll do some M&A. They probably won't talk about that on the call because they'll kind of keep a lid on that. But I think that they will do some M&A. And I think that they would look to try and round up that portfolio with a CTV offering, because that's just something that people are just paying a lot for. That's just something that has such a large total addressable market. And if you follow the space overall, you follow Magnite, you follow the Trade Desk, you know, that's really where all eyeballs are going towards. In the UK, Tremor, everyone's just moving towards CTV. It's become, you know, just such a compelling market, because for advertisers, it's difficult for them to reach large eyeballs without paying prohibitive costs. Because if you're going to go on social media, it's going to be really challenging for them, because you're going to have to, unless you're a large enterprise, it's really expensive for you to price that offering. With CTV, you get, first, it's a digital offering, right? So you're able to have an understanding of who's watching. You have some understanding about the demographics, and you have a large audience. So if you have a large audience and you're able to somewhat target the advert, it's high ROI for the advertisers. And when you get a high ROI, you're able to price that up more. So for Perion, would make a lot of sense. But it's just a speculation on part whether they would actually bring that in for the M&A. They might round it up somewhere else. But yeah, anyway, however we look at this, the stock is priced at approximately 11 times EBITDA. I think this is really, really cheap. If I just, I mean, don't need to, but if you want to just compare some of its peers, so Magnite or Pomatic haven't reported their results yet, but let's just compare with Magnite. So Magnite has a lot of debt. They've been really acquisitive during 2021, and they carry a lot of debt. So on the analyst day, they talked about how they have what it takes to grow at 25% compounded over the next several years. Now, even if they grow a little bit stronger than this, you're still looking at a company that is probably going to be growing, let's say 25, 26, 27% year over year, and it's priced at 18 times cash flows. In the case of Perion, they're priced at 11 times EBITDA. So, and they have a strong free cash flow conversion. So altogether, I think that, this looks really, really attractive. Yeah, and I don't know, however you decide to go with this, and I wish you good luck. If you want to find out what kind of names I'm buying right now, don't forget to check out my marketplace. It's called Deep Value Returns. See what other people said, check out the reviews from my marketplace. I help you by providing you with high quality, actionable investment insights. Okay, everyone, thank you so much for listening. Happy earnings season. See you soon. Bye.